Hello everyone. Today's topic is certificates of deposit or CDs. I'll walk you through their structure, interest rates, and how to use them effectively. If you have a social security number, you are eligible to open a CD account. Before we begin, English is my second language, so I may mispronounce words or say things in a way that is unclear. I appreciate your understanding. Thank you. Just a quick note, the term deposits are called CDs, which stands for Certificate of Deposit. These days, no physical certificate is issued, even though that was common in the past. Back then, you'd receive the paper document showing your deposit amount, interest rate, and maturity date, and you presented it at maturity to receive your funds plus interest. Now it's all digital, but the name remains. Let me briefly explain the types of bank accounts in the US. Checking accounts are used for depositing paychecks and everyday expenses like utilities and credit card payments. They come with a debit card and checkbook and are the most common type of account. They typically don't earn interest or only very little. Savings accounts are used for setting aside excess funds. They do earn interest and you can withdraw money anytime. Now on to today's focus, CDs or fixed-term deposits. CDs generally offer higher interest rates than checking or savings accounts. Here are the average interest rates in the US today. Checking account 0.07%, savings account 0.38%, CD 1.3% to 1.8% depending on the term. Today's video will feature institutions offering higher than average CD rates. And if you'd like to know more about high interest savings accounts, I've made a separate video. Feel free to check that out. If you want access to funds at any time, a saving account is a better choice. But if you know you want the money for a while, CDs offer higher returns. Common CD terms range from 3 months, 6 months, 1 year, 3 years to 5 years. The interest rate is fixed at the time of deposit. While you can withdraw early, it comes with a penalty, usually a few months' worth of interest. For unpredictable needs, savings accounts are safer. CD rates change monthly, even at the same bank and for the same term. For example, a 3-month CD may offer 3% interest in January, then 4% in February, or 2%. Timing can matter. As of July 2025, the Federal Reserve (FRB) is expected to lower interest rate by 0.25% twice within the year. Because CD rates are tied to the federal funds rate, a rate cut means CD returns will likely drop, so now is a good time to lock in higher rates. Want flexibility without giving up higher rates? Consider a strategy called the CD ladder. Here's how it works. You open multiple CD accounts with staggered maturity dates. This way you can access funds at intervals without penalties. Alternatively, you can split a lump sum into smaller CD accounts. For instance, instead of placing $10,000 in one CD, divide it into 5 $2,000 CDs. If you need to withdraw early, you can close just one. Now let's look at some of the top 15 CDs featured on Investopedia as of July 2025. The list includes financial institutions, CD terms, interest rates, minimum deposit requirements, and early withdrawal penalties. I used to hold a CD at Nassau Federal Credit Union, though I've since used that money. Continued. Several options offer interest rates over 4% even for short 3-month terms. These short-term CDs are easy to try. Many of these institutions are credit unions. Anyone can join, though you may need to contribute around $5 when becoming a member. Whether this amount is refunded upon exit depends on the credit union's policy. Credit union pros and cons. They are local and community focused, easier to qualify for loans if you're using a credit union in your area. They tend to offer higher interest rates than banks. Cons. Accounts can become dormant if unused for 12 months. I experienced this once. My balance dropped to zero and online access froze. It was solved quickly via phone, but some dormant access may be frozen or charged fees. If left untouched for 3 to 5 years, funds may be transferred to the state's unclaimed property program known as escheatment. CD accounts usually aren't affected by this since they have clear terms, but keep an eye on your checking and savings accounts. Next, I'll share 10 banks that offer high CD interest rates featured on my Japanese blog. Alliant, Bread Savings, Synchrony, Popular Bank, Sallie Bank. Yes, I've held CDs with Bread, Synchrony, and Sallie. And also Barclays, Marcus by Goldman Sachs, Discover, Capital One, Ally. I still have multiple CDs with Capital One. While other institutions might offer higher rates, I prefer it for ease of use and smaller balances. CD safety tips. Most U.S. banks are insured. Banks are covered by FDIC, Federal Deposit Insurance Corporation. Credit unions are backed by NCUA, National Credit Union Administration. Your funds are protected up to $250,000 per person per institution. If you use two separate institutions and both go under, you are protected up to $250,000 each. Still, banks and credit unions do fail in the US, so check the FDIC or NCUA insurance and review the institution's financial health before depositing. CD renewals. CDs usually out-renew at maturity with the current interest rate. You'll receive renewal notice about 1 month in advance. You can choose a different term and rate online in many cases. If you don't want to renew, some institutions require a phone call to transfer your funds or close the account. On that note, Capital One allows you to opt out of renewal online, which I personally love. Tax notes. If you earn over $10 in CD interest, you'll owe taxes. Financial institutions issue a 1099 form in late January. Rather than mailing it, most banks provide this online for download under the tax document section. Summary. Money not needed immediately can earn more in a CD. CD interest is fixed at account opening. Early withdrawal is allowed but comes with penalties. CDs typically renew automatically at maturity. You'll receive a notice about 1 month before renewal. Interest over $10 must be reported on your tax return. That wraps it up. Thank you so much for watching today's video on U.S. Certificates of Deposit. If you found this helpful, please hit the like button and subscribe to support the channel. See you in the next video. Thanks again. Bye.